Sam wrote, do you use game theory in business and investing? Absolutely. Absolutely. Now, Wayne Gretzky, he said that he wasn't successful because he skated to where the puck is. Wayne Gretzky said he was successful because he skated to where the puck is going to be. What does that mean for investing? Well, that means that we should only invest in stocks that people are going to like. Okay, so don't invest in companies that everybody already loves because there aren't that many incremental investors to push it higher. So how do you invest in companies that people are going to like? Well, what the hedge fund industry does, and what I used to do in the hedge fund industry, is we look at catalysts. Okay, catalyst means a reason for a stock to go up or down. So for example, back in 2012, we invested in Lionsgate Film, LGF. And I read the first Hunger Game books, I remember in 2011. And in 2012, LGF, Lionsgate Film, announced that they were going to be releasing several Hunger Game movies. And so those are catalysts. Those are reasons to get people excited. And so whenever a new movie came out for Hunger Games, they made 4 instead of the 3 books. Lionsgate Film will go up a lot because that was the production company that made the movies. When it comes to software, the same thing works. So with Take-Two, ticker TTWO, it's the parent company that owns Rockstar Games and makes Grand Theft Auto. When they release GTA 6, the stock is going to rip to the upside. And so you want to be there before that. Now, obviously, you can't have insider information about it, but we do know that eventually, likely within the next 12 months, Take-Two, ticker TTWO, is going to announce that they are going to be releasing GTA 6, and investors will get excited. So the bottom line is this: you want to skate to where the puck is going to be and only buy stocks that people are going to like by analyzing catalysts.